I mean, I can't make this up. Using this proven strategy, there were perfect picture scalps today. And yeah, sure, they're not 100%, but they're very high probability setups that have been proven to work for years. I value your time as much as I do mine, so let's get straight into the Benjis. I'll discuss the market's overall context, along with the best trades to have taken today, using this proven strategy and with other important factors. Make sure to watch it thoroughly. So let's go over the market context, what happened yesterday, and yeah, start from the highest time frame. So let's just, get the overall picture with the weekly chart, with the weekly time frame. We're in the macro. In the macro, we're on an uptrend, right? And the past month or 2 months so far has been a little bit choppy. We've been in this range since late February, from around 510 to 530, and we're kind of just chopping there, right, on the weekly. But overall, in the macro, we're still uptrending. We might be due for a slight pullback, maybe down to 510, or maybe lower to 490, because we've been, ever since November, we've been on a hot streak when many economists have been predicting a recession. It hasn't been that as of 2024. So with the market, you never know what's gonna take place. All you can do is play the technicals and believe your own eyes and take what you see, right? With the SPY on the 1 hour time frame, we had CPI yesterday, which caused us huge downfall in the pre-market, and then for the rest of the day, it just chopped right within this range. In the pre-market, it was still trading within that range, and so far, early in the morning, it's still pretty choppy. A lot of inside bars. We'll get into it later on. But yeah, that's just the overall context of the S&P 500. If we take a look at the Nasdaq, same thing. We had the huge sell-off yesterday because of CPI, and then choppiness the rest of the day in the pre-market. And then today, it seems like it might be trading in this range going back to the upside as well. But overall, we're still consolidating within this whole range right here from 435 to 447. And yeah, it's not the best price action. We just have to be aware of the levels, understand the ranges, and yeah, just take note of everything. The overall context, economic news. I believe the CPI forecast came out to be 3.5 and it was 3.4, something like that. Don't quote me on that, but yeah, it came out higher than expected, I believe. Either way, I don't really care about all that. I just care about, is my setup going to be there? And do I have the patience and discipline to act without hesitation when it presents itself, right? So that's the market context. Let's go into the next segment. In this segment called One Trade to Take, I'm going to be going over the best trades that you could have taken today. The idea behind it is that if you take one great trade in one stock every single day, then you can make consistent money from the stock market on a consistent basis. The key is extreme patience and extreme decisiveness. I'll show you the trades I took today. Let's take a look at SMCI. Let's start off with SMCI. Just want to show you guys on the larger time frame. Remember to always go from the highest time frame to the lowest time frame when mapping out your key levels, your trend lines. Know any setups happening. In this case, on the hourly time frame, the 4-hour time frame, you can see we have this huge trend line that we just broke in the pre-market. And so, if you trust the setup, you could have taken it long. And, if you're one of those swing traders who likes to hold for multiple days and weeks, you could have got in and, expect a move maybe to 1,069 at this key level right here, or maybe at this key level at 1,000. I didn't map it out, but maybe the next target will be 1,000. Just wanted to put this up and show, for any of you swing traders out there. But yeah, the higher time frame, the more touch points it has, the stronger the trend line is, right? And the stronger the trend line break strategy becomes. So that's SMCI on the 4-hour. And it's important, it's still helpful to note that, on the 4-hour, a trend line was broken, which gives me more confidence and incentive to go long today, right? So let's take a look at the 5-minute, right? Yesterday, it kind of just chopped. You can draw this trend line, I guess, towards the end of the day, but nothing significant. And then in the pre-market, it gives us this. And for the first 30 minutes, 40 minutes or so of the market open. We're kind of consolidating here. But, this is one of the plays where, I've seen it over and over again. What is it showing us, right? Take everything into context. We see this bullish momentum candle in the pre-market, and we're basically seeing a hold of the support level of 906. And then, what did I tell you guys in the previous videos, right? Always take note of the current market and what it's doing in tandem, in conjunction with the stock that you're looking at, right? So if we take a look at the ES or the SPY, whatever you choose to look at, you can see that the market is just falling, right? First 15 minutes just falls, gives us a little pullback, and then falls even more, right? But what is SMCI doing? First 5-minute candle, it's bullish, bouncing off that support level, and then it gets a pullback as the market is falling. But then, while the market keeps falling, what is SMCI doing, right? It's holding that level and going back to the upside, showing bullish pressure. A lot of buyers want to, push the stock back up. And so what is this stock? This stock is relatively strong compared to the market, right? And so I actually anticipated this breakout right here, and I got in before I even saw anything. It's also helpful to look at the chart on the 2-minute or the 3-minute, whichever you prefer, just to see the granular little candles that show. And it's pretty much, I was anticipating the breakout as it was showing relative strength, showing a support of this key level. All of these key elements play an important factor and role in giving you confidence, right, in taking a trade. So I actually got in right here at 920 before the trend line break, anticipating it. And then on the first move up, I take my partials, and then, something unfortunate happens, right? What does it do? It pulls back, rejecting this key level right here. And my stop loss was right here, right? So my stop loss was basically at my entry price. And so when the pullback hit it, I got out. Now my mistake was I didn't wait for the candle to close, especially on the 5-minute, which I like to look at. And so if I just waited out for the close of the 5-minute candles, you could see that I shouldn't really have gone out. I did protect my profits. Basically, this became a break-even play for me, where I lost like $22. But I was also looking at the 2-minute, and it was when the stock basically hit my stop loss, I got out. But if you look at the 5-minute chart, it's showing still bullish momentum, just a slight pullback. And overall, while the market is, just selling off, it's still showing relative strength. So there was no reason for me to get out. I did get out, break even, no harm done. We can move on to the next play, right? So what's the next play at SMCI if you didn't anticipate the breakout, right, of that trend line? It gives us another pullback entry along with the EMA and a trend line break, right? So upon this trend line break, you could have got in and, basically on the first move up to the high of day, up to the, where the stock previously was. You never know if it's gonna reject it, right? So you get out with some partial profits, take your partial profits right here and leave some runners, right? In this case, there's no pullback yet, right? So on the next move up, I probably have taken some partials out right here, maybe the rest of your position out, and leave a runner or so if you want, anticipating the next key target at this key level at 950. And so once again, this confluence of strategies and key elements is what should give you confidence as a trader to take a trade with no hesitation. And yeah, sometimes the pullback can scare you out. It shook me out today. I should have looked at the 5-minute time frame and waited for the candle to close. So that's another learning lesson for me. Everyone isn't perfect, right? We just have to learn every day. And overall, the micro trend of SMCI was bullish compared to the market, which was selling off, has been choppy. And so with the 4-hour trend line break and then the overall bullishness of the 5-minute chart, I should have just stayed in and then maybe even got another entry at this trend line break. But I'm still profitable because of my Tesla trade today, so nothing to be so down and out about. But just another learning lesson. Even when you win, there's always lessons to take, and overall it's good to have that kind of growing and learning mindset, right? So 2 picture perfect trades, well, 1 picture perfect later in with this trend line break. This was still picture perfect if I had just not gone out, right? So let's keep that short and sweet with SMCI. I will show you the SMCI premium chart where I trade options. So this is another thing you want to take into account while you're in a trade. So I can show you that right here. I got in with my option contracts at an entry price around $27.50. I took my first exit at $32.50, around, might have been 31s, like 80 or something. But I took my first partial out. Mind you, one contract at $27.50 will cost $2,750, right? So the premiums are a bit expensive on SMCI, with SMCI in the stock. You don't have to trade this kind of stock. You could trade Tesla or Nvidia or Meta, whatever you choose. The setups happen on every stock. So I chose to take SMCI. Got up to 31.80, 31.70. So that's already $400 per contract that it rose. But then on that pullback, it was pulling back a little more than I wanted to, right? Back below my entry price at around 25. And so that's why it caused me to lose pretty much everything that I made and break even with $22 in the red. So yeah, with option contracts, I don't want to get too in detail with the thetas and with the Greeks, but basically, over time, with time as a factor as well, it'll decrease the value of the option contract. So you need to get the timing right, and with certain pullbacks, you can lose more than what you anticipated because of the theta decay. And so I got out a little bit below my entry price, and then what does it do later on, right? With the second trend line break, right? It went all the way back up to the 40s, the 37.50s, right? So let's say you still held on or got in again at 27.50 and it went to 37.50. That's $1,000 per contract that you just made. With 5 contracts, you could have made $5,000. You get the idea, right? So that's with SMCI. Before I go into Tesla, what was important about SMCI, right? The 4-hour trendline break, its relative strength compared to the market, its pullback entries and trendline breaks, and just noting the key levels, right? So that's what SMCI. Now with Tesla, you can see that in the pre-market, it kind of chops like this, gives us a huge bullish momentum candle, probably on some news. First 5-minute candle, extremely bullish momentum candle towards our key demand level or key supply level at 174. And then what does it do, right? Usually rejects that level and goes along in conjunction with the overall market, which is selling off as well. So Tesla seems to be weak along with the market, right? Rejects that level. What you could do is play the supply demand levels. Once you see that supply has been rejected, especially on a lower time frame, maybe you're looking at the 2-minute time frame as well. Here, let me pull up the 2-minute time frame for you. You can see once you see this bearish wick, you can get in, set a tight stop loss using that key level right there as your stop loss. If it hits it, you get back out with a small loss. In this case, it just went straight downward, right, along with the market. So you could have gone in here, but it's a little too early for my taste. 6 minutes into the market open, I don't really like those. I don't really like taking those trades. And so, yeah, I first took SMCI, got out break even, minus $20 or so. But yeah, if you take a look at the SPY, is selling off, Tesla's selling off. And so what do I catch my eye on, right? I see this little bear flag pullback happening. Pretty self-explanatory. So I draw this trend line. I see this bear flag, and on the break of that trend line, I get in for some puts, going short. And at this point, it is a bit extended, overextended. I get in at 169.5, and I take, the rest of my position off at around 168.5. And it was a solid trade for me. Got me back in the green for the day. And, overall, it's not the best ideal trade. The setup is ideal, but the overextension is, and the time in which I took it it's a bit late. It's a bit of a chase, but the setup was there, so I took it, right? But I would never have gone in, over here, at the bottom of a sell-off candle, right? A bearish candle. That's straight up a chase. I got in at a pullback on a trendline break entry, so that's still acceptable on my terms. But yeah, it's good that I took it's good that I took my profits, right here at the end of the first move, because it ends up just reversing on me, right, along with the market, right? So that's a trade I took with Tesla. Pretty self-explanatory. What are the key elements to take into note with Tesla, right? We had our key supply level right here. It rejects that, and along with the market, is weak along with the market, right? And so it gives us, in the micro trend, a downtrend, right? So it's pretty bearish, and I'm just playing along with the micro trend, right? I'm making the trend my friend, not fighting it. It's been selling off, gives us a nice pullback entry with a bear flag. Take the trade, right? So that's with Tesla. Now let's take a look at Nvidia. With Nvidia, let's take a look at the daily, right? The highest time frame. You can see that, it's been giving us multiple trend line breaks for, any of you swing traders there. You had multiple opportunities to play this. Pretty self-explanatory with the trend lines, on the higher time frame, and with more touch points, the stronger the trend line is, right? So you can see that today it was a break of an important trend line, right? And that should give you another huge confidence boost in taking a trade long, going upward, right? If we take a look at the 5-minute chart, what does it give us, right? Nvidia was probably a better setup than SMCI in terms of, prioritizing which trade to take and which one was more optimal. It was probably the best trade of the day, Nvidia. Tesla was a bit of a chase, a bit of an overextension. It wasn't a chase, it was an overextension. With SMCI, I got out with, a minor pullback, got shaken out emotionally. But it was still a great trade, SMCI. SMCI wasn't second best trade of the day, but with Nvidia, the price action was just picture perfect. It was clear cut, right? What does it give us, right? About an hour of consolidation, but, overall in the micro trend is bullish, right? Pre-market gives us a huge bullish candle, probably with some news. And while the market is selling off, right? Always take a look at the market and the NASDAQ to see what it's doing in conjunction with the stock, right? So while the market is selling off, Nvidia is holding, right? Along with SMCI. Gives us these huge bullish wicks, right? Riding this EMA, daily trend line break. I mean, all of these key elements, just, chef's kiss, mwah, right? On this trend line break, after an hour or so, mind you, the cleaner the trend line, especially on a 5-minute, it's better than a 2-minute trend line, right? So on the 5-minute chart, the daily gives us nice strong, trend lines. And so with the trend line break on that, this candle right here is just, it's picture perfect, right? On this break of the candle, you get in right here, set your stop loss below that candle, and you ride the move up, right? So first move up, take some partial profits, right? Gives us a slight pullback. And then on the next move up, you have a key target level right here. You can choose to take it out on, into strength while it's approaching that level. Don't get greedy. Don't wait for it to, pass it or get the perfect price right at, at the level. Just take out your, position when approaching that level into strength. Or you could have just taken it out right here, right, on the next move up. All personal preference, and then, you can leave some runners. Maybe it'll pass this level. Maybe you'll see, you'll want to see, the first sign of rejection, first sign of weakness. Either way, Nvidia was, a lovely trade to have taken. And yeah, Nvidia and SMCI were very optimal trades. Now let's take a look at the S&P 500, the SPY. Just to show you that if you trade the SPY, if you're a SPY trader, you can see that what does it give us, right? First 10 minutes of the day, bearish candles, and then a slight pullback, right? It's a little bit early for my taste. Once again, at 6:45 a.m. to about 7:05, 7:10 a.m. gives us a pullback. But it's not exactly the market open. We gave it until 30-40 minutes of price action. So yeah, I can, it isn't too early. It's still a good trade to take. So what does it give us, right? A bear flag, right? A pullback to the EMAs. What's the micro trend, right? Downward. And on the trend line break, you get in, set a tight stop loss above that level. And on the first move down, you take your partial profits. And then you can take it, the next exit when approaching this key level right here. And then leave some runners, right? Once it hits your adjusted stop loss, you should get out. And, I'm pretty much thinking that it's going to reverse. Yeah, that's what SPY gave us a nice bear flag and a pullback entry along with the EMA. And so yeah, hopefully, you've been watching my other videos. You've, took a look at my trading principles, all of my trading strategies. It's not just one or the other, or you see this and you just take it, right? It's having the conviction with, the whole market context along with the higher time frame, the key levels, and overall, the relative strength compared to the market. And when you have all of these in conjunction with one another, it gives you more confidence and a higher probability in the trade working out in your favor, right? And so it's important to, get some good rest, get some, good night's sleep. Make sure that your mental is as clear as possible, and without any emotion, you take the trade in which you see with your own eyes, right? You're not biased or emotional to one side or the other. You're not looking at CNBC or the TV saying, becoming influenced by what Jim Cramer says or what a certain economist is going to say or do, right? Look at the technicals, and you objectively, take into account what's, in your favor and in your tool of arsenal. So yeah, that ends this segment. That ends today's video. Thanks a ton for watching to the end. I encourage you to take a look at the other videos that I've posted, as they have a ton of value in them as well. The goal is to ingrain yourself with these principles and these high probability strategies that are proven to work inside your head so that you become self-reliant. Once you've studied it and practiced it over and over again, you should be able to take the trade when the opportunity presents itself without any hesitation. You'll act just like a vulture, swooping down on its prey to catch your food at the precise, exact time. I love the feedback that I've been getting along with the growing subscriber count. So if you have any questions or comments, please put them down below. Don't forget to like the video, and I'm wishing you many more Benjis in the future.